Hi everyone, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol and Associates Asset Management. Just for our new viewers, a reminder that my next appearance on BNN television is going to be on December the 5th at 12 noon with Andy Bell. Anyway, let's take a look at what's going on, first of all, in the dynamics that are driving the overall market. And what we've got to do, of course, is we've got to find out what the Fed is doing. Well, the Fed looks as if it's back to its quantitative easing once again. As my sidekick Gilbert says, it's quantitative easing forever. Well, they started off way back here. That kicked the market into gear after 2008. Kept it up, of course, during 2011 and 12. Really ramped it up through about 2015, and then they've been sort of cruising. And indeed, things from the economic point of view seem to be doing so well that they decided to take their foot off the accelerator. However, President Trump is bound and determined to be elected in 2020, and he wants the Fed to put the accelerator back down again and make sure that that is the case. And so we're starting to see QE forever. Well, what's that doing to the market? Well, the first thing that, of course, I want to remind people is that when we look at the Standard & Poor's 500, which is our sort of our principal index for the stock market, I've noted again before, and I'll say it again, that in the past 35 years, the S&P has never risen above its own fair market value. And at present, the fair market value stands at 31.43. That's a little bit up from the previous week at 31.36, but the fair market value and therefore the potential of the market is not exactly galloping away. And as the S&P got very, very close to 3,100, it was very close to completely running out of gas based on our metrics. What we're going to see is if the Fed and its quantitative easing can overwhelm the long-term market dynamics. Anyway, enough of the background. Let's go and take a look at those FANG stocks. And the first one, of course, that we're going to always look at is Amazon. And Amazon, it just continues. I think it wants to go down to its HB2. That's 12 times book value. It has not really been reacting to the any uptick in the market at all for quite a long period of time. Before I leave this chart over, what I'm going to do is I'm going to show you a new addition that we have added to our statistical page, and that is to say we calculate the implied ROE of every stock that we follow. Now, why is it implied? Well, that's because that the earnings forecasts that go into that ROE are based on analysts' consensus numbers 1 year out. Well, so far, as we've seen in the overall market, the analysts have not responded by becoming rampantly bullish on earnings. And as we can see with Amazon, if anything, those earnings heading into next year are easing off, and with it the implied ROE. Now, that's Amazon, but there are a bunch of companies amongst the FANGs that look as if they are sort of trying to do something if the market will go along with them. And the first one is Facebook, and it's been banging up against its MSG price for some while now. That is 5.5 times its book value. Hasn't been able to break out so far, but it certainly has been trying. Turning to Microsoft, which is it's not really a FANG stock, but when you've got a market cap here of $1.1 trillion, it deserves to be up in the rarefied atmosphere with the rest of the FANGs. And here we can see Microsoft trying and trying and trying to get through its HB1 price. That's 10 times its book value. And as I've showed you in past FANG Fridays, that HB1 is a very, very significant price for Microsoft. The next stock that is, of course, of very considerable interest is Apple, and here you can see that the Apple stock has got right up to its HB1. Well, we did not actually expect that that would be the case, because when we look at the evidence, the valuation evidence of this stock for the past 10 years, it has never been able to crack through the HB1, the fair market value, which is this dotted line right there. So when we look at it up close and personal, we see that the stock is right there. So we've got at least 3 stocks that are sitting, contemplating doing something. And the fourth one of the FANGs is Netflix. And here it's been up against its HB3. And there's been a little slowing down of the earnings estimates, and of course the fair market value. But and this, by the way, despite the fact that competition for streaming services is heating up enormously, and it really does make us wonder just exactly what the economics going forward are going to be. Nevertheless, here's the fourth of the FANG stocks, which looks as if it would like to go higher if it's allowed to do so by the market. The long-term look at Alphabet shows that the stock has been trading in a channel now for the past 10 years, and it's up against the kind of the upper reaches of that channel. But let's go and take a look at Alphabet from an entirely different point of view. Let's look at it the way that a standard technical analyst would do. And well, if we do that, what we see here is what looks like either a triple top, or it looks like a stock which is coming up, and if it could break through, could have a nice run. Well, as I showed you from the long-term point of view, a nice run doesn't actually carry it all that far, because the last 10 years has kind of limited that that potential. And of course, although I'm sorry that we can't show it this week, but we'll show it next week, the implied ROE for this company is only about 15%. So this really does not have overwhelming dynamics. Last stock to look at is NVIDIA. And, well, NVIDIA tried to break out and failed. Tried to break out and failed. This time it's made another attempt to break out, and it looks to be a lot more successful. We ourselves, I don't know, I can't even say that we're belatedly on the bandwagon for this company, because if we look at the fundamentals of the semiconductor industry, they're absolutely terrible. But that hasn't stopped the analysts from being very bullish and continuing to propel the earnings forecasts upwards for this company. Unfortunately, of course, it's left NVIDIA about with the downside risk of a full, not quite 50%, but very, very close to it. So it's high and risky, but in the markets of today, tell me about high and risky. Anyway, that's our look at the FANG stocks for this week. This has been Ross Healy, the chairman of Strategic Analysis Corporation and senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.